All right, let's jump into it. Chance to do a little bit of the weekend wrap, and that obviously sort of have a look back on how the week sort of finished up, and that see if we can sort of pick out sort of any potential sort of trends for this week coming up. But oof, it is looking like it is going to be an absolute sort of hectic week. We got a lot of big data coming out at the moment. We got some things at some big levels as well, particularly gold, US dollar. These are the main sort of drivers for it all. But yeah, it's going to be a fair bit to sort of unpack in that. But look, first of all, just sort of look at how sort of Friday ended up because we had a little bit of data out, quite through Asia, quite through Europe, and they're pretty much Euro sessions that. I mean, a couple of like French PMI, CMI, CPIs. This stuff doesn't really sort of affect what I'm sort of trading so much in that. Core PCE was the kind of, I'd say, the big one. I guess the PCE in the past has been the bigger sort of thing that market's been paying attention to because the Fed have said that the PCE is their sort of preferred gauge of inflation, and obviously, so with most recent events, which are the Fed or Powell in this case, sort of saying that he's shifting his focus more onto the sort of job side of the data opposed to the inflation. It kind of has already taken a back seat. So I covered this through the week, and I didn't really sort of think that it was going to be a big mover. And I mean, apart from the fact that it came in absolutely snoozer with the data, it came in unchanged as expected, bang, and really didn't affect the market much at all. Of that. Well, not that I believe that that was really any sort of driver. I think if we just have a quick look around, I mean, we saw a quick bit of a sell off afterwards with it all, but look, the thing is with it, sort of, okay, so like, he's been saying, okay, inflation's coming, inflation's coming. We had a bit of a mix with it all because CPI was flat. It was still, sticking around. It's, I think, 2.8 or something. It still came in at, so it's still above where they want it to be, but it was flat. PPI came in very strong, and now we've got PCE, and PCE coming in sort of flat. Kind of even the fact that it's not a shock number to the top side kind of goes in the camp of, well, okay, maybe inflation isn't an issue. So maybe the Fed and Powell at this stage are right to look at jobs data more closely and scrutinize that and use that as the sort of kind of like the gauge and the driver for what they may do more, I mean, moving forward, but particularly obviously the sort of rate cut that's rate decision that's so rate decision that's sort of coming up this month. And of course, that is the big question. I mean, the market's sort of saying, hey, look, yep, definitely cutting. It's a sure thing. Move on. And that's fine. You know what I mean? These kind of things go up and down, and it's priced in. It's priced at this much, and it goes up and down and flies around with all these sort of bits of data and all that. But the thing is, it's sort of like when people are so sure on things, that's generally when you've got a pretty good trade opportunity on the other side. Because the thing is, if the market's like, yep, bang, they're cutting it, and they pre-price it, and then that's what happens. Well, I mean, what do you want? There's not that much of a shock. Whereas sort of like, when everybody's supposedly priced, air quotes there, priced in for the idea of of them cutting and then they hold, that's when you get the shock. And when everybody's on one side of the boat, you don't need to have too much sort of on the other side to make them if they sort of get it wrong and they start flying across to the other side. That's when you'll see a very fast sort of reaction with it all. So I almost sort of prefer going into these kind of, or not just these ones, but most of these events and that with a bit more of unsurety because you've got a trade that can happen both ways. We saw last year that the Fed were pricing for a 50 basis point cut for ages and ages. And I think I covered it. Yeah, here's like literally the chart that I sort of put up with it. And this was the area here. Like they're going to cut, and bam, we got this big sort of sell down with it all. And when they actually did cut, this little spike just here, that was the 50 base point cut. But this is all the talk happening prior to it all. Now, there's obviously different factors at play at the moment. This area through here is obviously a lot of the sort of tariff uncertainties and all this kind of stuff with it all. But certainly any sort of little stronger bits of data. I mean, look, US dollar hasn't been able to get out of its way recently, but any stronger bits of data, it's still getting sort of sold into, it's still getting anchored down here. So it really is, as I say, sort of pricing it in by holding it down to the lows. Now, if they cut, well, maybe people just cover into that. Maybe see a move up. Maybe they hold, and then people peel off some of those positions. So I think it does actually give some sort of a chance for a little bit of an upside move. But I'll get to that in the charts in a moment. Point being is that sort of this PCE number coming in flat kind of means, okay, meh, whatever. We're not really looking at inflation in this regard. We know that. We know what the Fed are doing with that. And, bang, onto next week, onto focus of this coming week, where we've got, as I said, ADP, we got JOLTS, we got NFP. They're the big ones. I think there's also ISM data as well coming out. So it's going to be quite a busy week. And also the US is on a holiday for the Monday. So this will be quite interesting, particularly come the sort of start of the week. Other little bits of data here as well. Look, we had the trade balance coming out here. Obviously, they are expecting this thing. This got revised from which direction? So 86 to minus 84. They're expecting a little bit of a slowdown. Came in even worse. That's probably a bit more of the driver because again, it needs these positive bits of data to back it up to sort of keep some sort of momentum going, which really it gave up anything that it had throughout the day there. Consumer sentiment down a little bit below expectations, in the opposite direction as what they were thinking this was going to move as well. And Chicago PMIs as well, another one that was quite weak. So, the other sort of supporting bits of data, like even if PCE wasn't really much to look at, other supporting bits of data aren't particularly sort of US dollar strong with this lot here. So let's flick along to this week. So yeah, it is Sunday 31st. So what are we at? 11:25 now. So a few minutes into this one. So let's get through it. So we had a bit of China data out over the weekend. It's not going to be anything that's going to really, as far as I can see, sort of impact markets a great deal. It's coming in pretty much as expected as well. So again, these are PMIs. So they're the ones with a 50 on the baseline. Non-manufacturing, I guess, is that services, which seems to be the theme across everybody at the moment, that the services are beating. Manufacturing are a little bit weak. Come Monday, tomorrow. So as I said, main sort of thing is US holiday, CAD holiday as well. Got a little bit of data out. We know Monday is generally pretty quiet for in terms of data coming out. A bunch of PMIs and that coming out through Euro session. We've got inflation gauge with Aussie here, so that might actually sort of spark a little bit of interest in it. Job advertisements. Basically sort of consider this the same as the JOLTS kind of thing. It's job openings over there, but job advertisements as well. So you can sort of put this in to sort of see what kind of direction. Like JOLTS will come out with a number. This is obviously a sort of percentage, but yeah, it's just the same kind of thing. Like that's what you tend to find. A lot of these sort of central banks, they obviously there's the main parts of data that they're recording, but they'll all do their own little twist on it. So everybody doesn't report everything exactly the same, either different names or slightly different methods of sort of recording these things as well, of course. But that's about it, sort of like, so you got a little bit of sort of Aussie data early, nothing that's really sort of, oh my God, wow, here, let's go for it. But you never really get that on the Mondays. So I think it's a little bit of quiet before the storm on the Monday there, moving into the Tuesday. Not really much going on. As I said, we got ISM manufacturing in that. So that's 12 o'clock. So kind of Tuesday night, Wednesday morning, but Tuesday night in Australia. Apart from that, no data here that's really looking like it's going to be moving much. Oh, we got Euro CPI. Okay. No, they're actually not too bad a number over here. And look, it's looking to sort of tick down a little bit there at the moment. As I said before, like inflation, I was talking about in regards to the US, inflation has kind of become a little bit of a sort of non-issue across the board with a lot of places, it seems more recent. Like it doesn't pack the same punch that it did a couple of months ago. So, a lot of these places have got right down into that kind of like band of that 2 to 3% area. And they're kind of sort of hovering around there. So we'll see how this sort of moves with it. It's obviously something to sort of still pay attention to, but it's looking like it's a little bit of a slowdown. Obviously, if inflation's not the issue so much for them there, that could be sort of a little bit of a slowing on the euro. So we could see US dollar hold up a little bit off that. But I think ISM is going to be the more the sort of mover for the session for sure. And where are we going here? So yeah, we've got the so PMIs here. So again, and this is the one with the 50 baseline and that. It's basically just going around asking a bunch of different businesses. I'm not actually sure how they sort of select these sort of ones, or maybe if anybody even knows. But basically just sort of business conditions and that with it all. And of course, as I said, 50 is the baseline. 50 is the indicator there. And so above is obviously expansion. Below is contraction. So a survey of 300 purchasing managers, which asked respondents to rate the relative level of business conditions, including employment, production, new orders, prices, supply deliveries and inventory. So a little bit of a sort of snapshot of the health of the business, I would sort of say. And obviously then they sort of gauge, okay, as a whole, if we extrapolate that out, are we looking good? Are we looking bad? Where are we at with it all? Expecting 48.9. So, I mean, where have we been going recently? So, look, it's in the ballpark of it all. But again, you want to see these numbers up above 50 to sort of show, expansion, sort of actually sort of a healthier kind of number. Sub 50 is obviously still not moving in the right direction, but at least it's not moving further into the wrong direction, if that kind of makes sense with it all. And then sort of manufacturing prices here. Bear with me one sec. I didn't actually sort of know the difference between these two, but so it's a component. So this is the ISM manufacturing prices, a component of the PMI, but reported separately as an inflation gauge. Above 50 indicates rising prices, below indicates prices falling. Well, this is coming in at 65. So I think this would be something probably worth sort of paying attention to because obviously your prices are going up. As much as they're sort of saying, hey, look, inflation's not the issue, that could definitely be something that gets plugged into that sort of side of things. So yeah, it's definitely it's ISM's going to be one that's probably moves the market. I put it again about third tier bit of data. I don't think it holds the same weight as the NFP or CPI, but it's certainly something that the market will be sort of looking forward to. Apart from that, we've got GDT prices. I don't really watch it, so I just always remember this one. It's like the milk prices in New Zealand or something. Sources don't get release time. I'll say they're tentative, so it's a very secretive sort of stuff with them there. There we go. The weighted price of 9 dairy products sold at auction are sampled and then compared to the previous sampling. The only reason I've sort of noticed it is because I was trading New Zealand dollar years ago, and this thing absolutely made New Zealand dollar rocket, even though it's a like low bit of data in that. But look, it's something interesting to see anyway. So moving on, we got Aussie GDP quarter on quarter there. So slight tick up there. Look, Aussie just refuses to kind of die at the moment. It's coming into some pretty crucial levels. Um, Yet again, it just refuses to sort of hold these sort of breaks to the downside. But as I keep sort of saying, I think it's really off the back more of a weak US dollar across the board than Australia doing anything sort of spectacular. I mean, it has been lagging. Equities at all-time highs right now, whisker off it, and Aussie has just not recovered much there at all. So I think there's certainly a little bit of sort of risk with these sort of things here. Look, if it comes in a stronger number, we see US dollar still on the back foot, then okay, yeah, we could push up towards 66 cents possibly. I think we closed at 65.40 or something back up there at the moment. So look, could see this move a little bit. GDP, we've seen it more recently with the Aussie data, about 10 points these things pop to. It's not really going to be something that, wow, smashes around. Bullock speaking on Wednesday might be something that's worth paying attention to. We got Lagarde speaking, 5:30. We got sort of Bullock speaking at 6. Not sure what she's talking about, but maybe she could sort of comment a little bit on latest CPI, which I think potentially would have a sort of possibly a negative effect on the Aussie dollar in this regard, because we had strong CPI, and that's in theory, well, an inflation, and that wasn't just strong, that was like a big boomer. It went up like 1%, like that. It doesn't move that much normally, but I have a feeling that the market's very much sort of acting like a little kid and going, oh, high CPI, blah, 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 blah. I think she's going to come out and she's going to say, hey, look, it's going to take more than one bad print, even if it's a really strong print. It's going to take more than one bad print for us to change our course. And she said over the last couple of sort of meetings is that, look, it's about timing. So we are moving in this direction, i.e. cutting. It's about timing. Maybe if you get another CPI and you get a quarter on quarter or something. Remember, it took so long for them to get moving. Are they going to sort of just turn around and just go, oh, we had one bad print and then okay, boom. So I think if she comes out and reiterates that, if she comes out and says, hey, look, you know what, CPI is going to take more than one bad print for us to sort of really change course now that we've sort of got the ball rolling, that could see a little bit of a pushback on Aussie. So I'll definitely set the alerts for that one for the time, to sort of see how that one plays out, because I think that could definitely be something that Aussie may react to. Another one, just on, actually, I'll cover it with the charts as well. It's just saying that it's obviously off the back of a weak US dollar, but it's also on the back of a very strong yuan, which is breaking down towards some very sort of major levels at the moment, which I'll get to on the charts. So yeah, moving along. So a couple of Aussie bits of data in that earlier in the week. Moving forward, so Wednesday night, coming in, and we got the jolts. So jolts here. So this is the first kind of larger bit of sort of data that we're going to be sort of seeing for in regards, direct regards to the jobs. And these are the three big ones. It always comes out. It's the first week of the month. You have jolts, which is the job openings. So 7.44 down to 7.24 as expected. So the idea, obviously, with this, less jobs are being advertised, well, less people sort of they're being employed. Why are you doing that? Well, you're doing that when you're not so sure about the outlook of stuff and you're not so pumping up, sort of like with the profits. You're like, hey, let's just chill the horses. We don't need to take on anybody more at this moment. Let's see how it goes through the next month. Let's see how it goes through the next quarter, whatever. And that's the kind of feeling with it all. So obviously a weak number here is going to feed into that whole, oh, geez, we had, less job openings, Powell's right, we're talking about jobs now, they're going to have to cut, and if they have to cut, that's going to be weak for the US dollar. So a weak number here is going to be very weak for the US dollar there. Apart from that, we've got some factory orders and that, moving in the right direction, still negative. Seems to be the theme of things a lot. Nothing seems to be rosy at the moment, but at least it's moving not in a worse kind of direction, if that kind of makes sense. We've got a Fed speaker coming through here. Basically, the only Fed speakers that I see moving the market at the moment is pretty much that Waller guy who said, when he chats, man, he goes on and on. But yeah, this Kashkari, I don't even know this one at the moment, so I'll have to see how that goes. Beige book, that'd be interesting. That actually, what's beige book on here? Well, impact of FOMC receives through bubble. Information on that rate decision. Oh, interesting. Okay, I don't actually know because there's a people that you sort of cover on like these guys that do their own analysis of the actual economic situation in China because obviously you can't trust the PBOC numbers, and they're also called Beige Book. So maybe that's where they sort of stole the name from. Interesting. CHF CPI is one that is going to be quite interesting because the only reason that it's being at the moment is that they're talking about sort of the SMB is talking about going negative with their rates. If they go negative with their rates, it kind of creates a situation where sort of like if you think about it, like CHF is a safe haven currency. If they're going to negative rates, that kind of takes the wind out of the sails of, oh, if the market does go to a risk off kind of thing, okay, market's gone risk off, like, where are we going to go? We're going to go to the safe haven, air bracket, safe haven currencies. In a perfect world, that's JPY, yen, they're off the cards because the BOJ just refused to actually sort of pump up the rates at all. US dollar has been obviously on its back foot. CHF is the one we're talking about now, and if they go to negative rates, they kind of fall into the same camp as the BOJ and the yen. And then you've got gold. So you may actually see either sort of a sort of another reason for gold to be potentially pushing up a little bit, though gold does run with CHF, or maybe CHF runs with gold, but they do have a bit of a correlation there. It could open the door for some of these flows to go into US dollar. Now, US dollar has obviously been getting absolutely blasted all year, basically. But it is in a range. It's holding the range supports at the moment. So, but the other bits of data are going to be the big things that drive it. This is just again another little thing that you can kind of plug in along the way. After that, ADP. ADP is the big one here. Quite a weaker number here. We had a big miss last time. Oh no, it was that's a big miss to the top side, big miss to the bottom side, big miss to the top side. There is no cohesion in these numbers at all. 155, 63, 32, negative 33. Whoop, back up to 104. This is the thing. It's a bit hard to sort of trust these people. And we saw this the other month with the revision on NFP. Like the thing that was like 170,000 or something. I can't remember. Some ridiculous amount that it was off 130,000 or something. They got it wrong in 1 month, and the ABS, the lady from the sort of Bureau of Statistics, I think she got fired for this as well, which is fair enough. I mean, look, that's your job. That's what you're supposed to be doing. You're getting it drastically, drastically wrong. And also, it erodes trust in these kind of things. I mean, that's why people very like take PBOC numbers with a grain of salt because you just haven't got that trust in them, and that's kind of what you're seeing with these guys as well. Anyway, another one, negative looking number or expectation for the market as well. So you can tell. So job openings down. ADP is the private sector. Those numbers are looking to sort of pop down as well. Though the thing with ADP though is like there was a point in time where people were like, oh, the ADP is up, so NFP will be up, and I've covered this a couple of times again. Like, it feels like every second thing I say I've covered it a couple of times, but that's the whole point. Um, I just think it's a very terrible indicator as to what we're going to see with NFP. It's not even sort of good as in like, okay, well, if this is down, that'll be up. If this is up, this is up. Like that, it's just that sometimes they work together, sometimes they work completely polar opposite. There hasn't really sort of seemed to be anything that's sort of like a tangible, sort of usable bit of data. Well, maybe not tangible, but like, usable bit of data that you can then apply to sort of see what the NFP is going to be. So yeah, the fact that this comes in negative, weak on the US dollar for that, but I wouldn't say that's setting the stage for what we may actually see um, sorry, US dollar with NFP. So lost my train of thought there for a second. After that, we've got unemployment claims and that. This comes out every week, of course. So 229 and that. So it come back down a little bit. Sort of it flared up there for a second, up into the 35, and now bang, we're back down there again. And they're expecting this to stay pretty flat. Moving forward, we've got more ISM data over here, so the services side of stuff, and these ones are actually looking a little bit stronger. And this is what I was saying earlier, that I feel sort of like the PMIs, the services PMIs, and that seem to be the things that are consistently sort of expanding more recently. But manufacturing's where everybody seems to be a little bit on the weaker side. Again, another one stronger number here. If it comes in as expected, I don't think it's going to be a big shocker, but if it comes in shock weaker, it's another X against US dollar, and if it comes in a little bit stronger, well, I don't think it's going to be okay. Let's buy up the US dollar. I think it's just okay. Let's just not sell it off that bit of data. So I think there's so much jobs data coming out this week that that's going to overshadow these things a little bit, in my opinion. And then, of course, finishing off the big one that we're looking at, 74, like 73 last month, but can we see any sort of revisions of these things? This is what I'm talking about. It's like 144 came in, 147, and then it was revised to 14,000. So 130,000. Whoops, forgot to carry the one. Bad. So the revision number is going to be interesting. See what this 73 gets revised back into, and then obviously see where they sort of come out with it here as well. And this is the big thing that everybody's sort of saying, look, jobs, 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 jobs. If it continues that sort of like, if we have a look at the graph here, have we got anything that's usable? This one back over here. Oh, mine's 20,000. Yeah, let's go. I was going to say we don't need to look back and include those sort of digits, those numbers there. You can see all in all, it's apart from the stupid outlier here, which I think I've covered this. That was when they had those it's like floods, tornado, monsoon, whatever they have in Florida. That was last year. But all in all, you can see it is slowly a couple of flare-ups, but it is moving down, moving down, moving down, moving down, and quite a bit under sort of expectation there as well. So that's going to be the big one that really sort of seals the fate for the US dollar. And really, I think it's going to be quite important to see, these other ones are going to set the stage for it all. But if it's on its knees and then this comes in weak, that could be the big break down to the bottom side there. But I'll cover this as we get into the charts, which we'll do now. So as I said, look, this is just a bit of a sort of broader kind of view of DXY, US dollar. This is kind of where we're at the moment. Like, we're very much in danger of having another big leg lower here after a break out of the bottom side of this sort of larger range. Put this, I think, on the weekly may show it a little bit better. But as you can see, so far it's sort of refusing to hold to sort of die off in that. So let's get on to a smaller time frame that we can actually use as a tradable plan. So Basically, as you can see, it's just in a range through here. This recovery here, I honestly didn't think this would come so quickly, but of course, just recapping these sort of bits and pieces here, we had, Powell last Friday ago, at Jackson Hole saying, hey, you know what, we're looking at jobs. Smash down. Recover, 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 recover. Trump fired Cook. Quick little sell off. Bang, move back up. Came down. And then sort of this is important because of that sort of Cook lows there, because this is our midway point. But found a little inverted head and shoulders, went up, undid that level where he had the speech, and bang, it sold off since. So coming into the Friday session, I think this was Thursday through here actually. Yeah, Thursday we had, okay, little gap, tried to hold this midway point, obviously didn't, bang, sold down. This is what the call was, that if we couldn't hold these levels, then we may get a little bit of a hold up around the 61, but pretty much you can see this is where the buyers are keen to sit on it, and this is going to be very crucial as to where, in my opinion, where the market's sitting at coming into, oops, on, coming into this Friday. Because if we're already, like, I don't think we're going to get a breakdown through it, but who knows? We got US on a holiday on Friday, on Monday, so we'll see how it goes. But it moved up through here. This was through the Friday session, and the target was this here, as we can see, this midway point. It's a level that it's held a number of times, but most recently was that Cook sell down, and then the second touchdown over here as well. We actually get onto 1 hour. Can we see, did it actually take out that low? Yeah, so here's the low from Cook, took out the low, and then just ripped right back up to the top side here. So you could tell that it's really just sort of playing a lot of games in that. It's just getting up to this level, and then bang, sells back down here. It's going to be crucial for it to hold these levels. I think if it gets underneath 97.50, I would say that's kind of not looking pretty too good for it, and almost a bit of a confirmation of a breakout of this range, or confirmation underneath these previous lows that, okay, it's coming down here. We can look down to sort of 97, 97.10, this kind of area, to see if it can get a bit of a bounce, and then obviously underneath that we're looking to those lows from back at was it in July. So, there's a little bit of, obviously, still a little bit of sort of sour sentiment with it all. Everybody's looking at jobs. Everybody's thinking, okay, yep, cuts coming, cuts coming, cuts coming. But what I said at the start of it, when I sort of showed what happened last year, when everybody was talking about cuts are coming, cuts are coming, cuts are coming, and then they cut 50 basis point. What we saw was obviously a 3 month run that actually went 161% of the drop down prior of that whole time that they were talking into it. So, to me, it kind of feels that sort of like, there's a couple of ways that this can play out. One, well, obviously, but look, one, everybody's already sort of short. Everybody's already pricing it in. Everybody's already hammering US dollar for it all. Now, if they have the bad numbers, yep, they got to cut. You can still get down over here. But come the time that they cut, if everybody's already short and everybody's already been positioning for it, and then they cut, they kind of may just do exactly that. They just sell into that position there. And they go, okay, well, that's out of the way now, bang, and we see a bit of a sort of recovery for it. This is a bit more sort of forward thinking. This isn't what's going to be happening this week, because we don't have the rate decision this week, of course. We got all the jobs numbers. But should they sort of hold, or should we have a little bit of a stronger set of data, and the jobs, okay, hold on, wait, the jobs aren't so bad, you're going to see US dollar appreciate back up to these levels over here. So come Monday, Tuesday, I think this is definitely going to be the crucial kind of level to sort of see if it can sort of get up off the floor here. First of all, it's got to stay in the range. If it does see it stay in the range, then sort of above sort of 98.13, which was that low from Cook comments about sort of Trump sort of fired Cook or whatever. It's the highs that we sort of saw rejections from come Friday's session, and then bang, sort of push back down there. So if you want to sort of move up at all, it would be above that little level there. We do have a couple of wicks over here, so it doesn't mean that it can't just come up here and roll back down overall. But first things first, you need to take out those highs there, because that was where we said, look, that was the target. This is where we're going to see the sell down. It's exactly where it happened. Well, okay, so we know that the market's looking at that point. So if we get back up there, you'll see a reaction. But again, it's about the second effort. And if we can have a second effort and drive through there, and maybe if we do get some sort of data that's maybe not too bad, so we got the jolts, maybe let's get stronger jolts numbers coming out. That could see a little bit of an appreciation and continue of this range a little bit, sort of at least till we get sort of NFP. And if NFP comes out shocking, well, that's probably going to be down over here. You know what I mean? It's quite possibly we sort of see the break of those levels down over here. But again, that's what everybody's pricing for. That's what everybody's calling. That's what the expectations are. Um, we've seen they're quite clearly not right some of the time, or more often than not. So there is the possibility that we do actually see some sort of stronger numbers, and that then people go, oh, okay, they call into question a bit more the chance of them sort of basically cutting in September. Now they use the sort of there's a method for this, like a sort of it's not just like a hey, this is the number I think. It's based on the bonds as well, but it's priced at 88% at the moment. So if we see some strong data, that'll drop off. People will be a little bit unsure. When they're unsure, they're going to peel back part of their position. If they peel back part of their position, that's going to see US dollar appreciate. That's the way that US dollar is going to be able to sort of survive this period through here. If it gets sort of weak numbers, weak data, then I think that's bang. That's what's going to sort of help it sort of drive down over here. But with these things, you tend to not see a great deal. I could definitely be eating my words tomorrow for this. But generally, you don't see major breaks prior to the data. So if we come down and go through this level over here, well, okay, bang, I'm wrong, and they're actually moving it prior to the data. However, I'm probably more in the case of the idea that we do see a little bit of an appreciation into this kind of area over here, at least till we get some of those bits of data out, say through jolts or so. And this sort of takes us through till Tuesday, so around this sort of period over here, which obviously is coming into a little bit of a triangle here. It's not a big one because really there's only two touches there. It's that big spike up, but certainly look, it's on the back foot, but that's sometimes where the opportunity lies. All right, so on to gold, and gold is absolutely ripping. So I had like a little wedge. I actually sort of cleared these charts, but I did have, I think it was this one here. I can't remember exactly where it was. It was like a wedge through here or something. Maybe through that. Maybe that's what I had. Yeah, I think that looks a bit more like what I had there. And this is obviously a little zone through here where we had those highs. This was the play, and I didn't catch the long on this. I was actually trying to sort of get to see if this would break down and come back down underneath here. But as you can see, we pretty much had, well, this is probably a little bit wide. I didn't have that fully in there. Anyway, whatever. That's the point of it all. Resistance, 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 breaks through, retest, bang, and moved on here. Now, this came at the same time. It's 10:30 that it actually took on 9 o'clock. So it started to move at 9 o'clock and then picked up pace around that 10:30 when we had that PCE data come out. And this is the point that I was sort of saying with it, that I think that, that PCE data not coming out particularly exciting at all. It was dead flat. Plus some negative US dollar data. They weren't obviously sort of big, sort of massive bits. PCE was the sort of golden one there. But the point is that, that kind of reaffirmed to the market that, okay, yeah, so inflation isn't an issue so much. So jobs may be the thing that they're looking at. They sold the US dollar off and gold appreciated. Now, gold has actually had one of its best closes. Actually, look at that. It is its strongest daily close ever. So that has really, really sort of exploded up to the top side here. So look, it's very much a breakout point. Look, a lot of people have sort of been calling this thing just a very large consolidation, and look, it very much is. But you got to remember that, look at these days here. We were thumping up here, and it fell in SARS. These days here, fell in SARS, and so on and so on. Yes, this is a good close for it. I'll give you that. It's a very solid close at the top side here. But I am still just a little bit cautious about this move going through here, because we have seen gold being bought up into the weekend a lot recently, and then sort of come Monday, it just sort of fails a little bit. It's almost sort of like basically people are hedging for any kind of sort of disaster to sort of happen over the weekend, and then when that doesn't happen, or if it doesn't happen, then they peel off those positions. And as I said, we've got a lot of data coming up this week. Nothing seems to have happened over the weekend. Do we get a little bit of a shake back down here? Now, it doesn't mean that we're going to see the sell downs the same that we're seeing these ones. We've seen the bid has been moved up from the buyers back over here. So they're driving up here. So again, look, the focus is back on 3,400 at a round number. I mean, it's 34.46. I mean, we're a whisker away from all-time highs here. It actually only just stopped at these other highs that we've got here. So these highs from second, third effort or so towards the all-time highs back in June. And it sort of closed right on the top over there. So look, very bullish close to it all. I'm just just saying that sort of like we've seen this happen a couple of times where it's been like super powerful into the close, nothing happens over the weekend, and things pull back a little bit. If we see a little bit of sort of lack of data and lack of sort of catalyst to continue it moving forward, you could see a little bit of a pullback. But at this stage, that's a pullback to buy kind of thing. If we sort of drag this and say this is the last move through here. So I don't like these things over here. Let's put them on the right. And let's move it up. Let's green one there. Really, you can just sort of go, okay, where could they sort of be pulling back? So look, super bullish. And hey, look, I've been slapped a bit with gold. We do have this sort of triangle that we were working off originally. We had the fake breakout, move down here, kind of retested the underside here, which it did sort of react to quite well, push back down. It's still coming up to the underside of this rising support, which, you know, it's kind of chopped through it enough times to almost sort of make it a little bit obsolete. But again, this is a break back test of the underside. There's no reason why we can't get a deeper second pullback to the underside over here. So very bullish on it all. I wouldn't be buying it straight off the bat. Maybe it'll come out and it'll just rip up over here. But, you know, that's not my sort of base case sort of scenario with it. Back around 34, I would like to sort of see it sort of really do a deeper back test. And then sort of if that holds at 34 a second time, and we see that the buyers even sort of continue their move up here. So if we say, look, this is the kind of direction it's moving up. If it sort of comes back and tests this little short-term rising support here, and we see this thing, the buyers react on that, I think that'll be the time to see this thing sort of blow through to the top side there. But yeah, above sort of 34.70, I mean, there's no reason why pretty much if you go above 34.60, you don't look to sort of feel the wicks over here at, of course, all-time highs. So super bullish at the moment. Again, look, it's going to run off US dollar. If we see US dollar sort of recover a little bit, it may put a little bit of a dampening on it and a little bit of a handbrake. But certainly if we see US dollar get absolutely blasted and sort of drops through those lows, all new highs, 100%. Sort of moving with gold there. So very much on an absolute rip there. Not a big fan of that, actually. So I'll take that one out. All right, moving on. Okay, yeah, so moving on, Aussie. And this is another one, as I said, sort of like, this is the call. I thought that we may have been getting this, and this is why I don't like I don't like these, what they're called, megaphone patterns. I put them in the same camp as like diamond tops and these kind of things as well. The hit ratio I've found with these things, maybe I'm just not calling them right, but certainly getting higher lows and yada yada, and did react a third time off there, but still charging through. So I thought we would have got to pull back a little bit earlier with this here, but certainly still seems to be sort of charging along here. It's through that little sort of medium-term falling resistance, which seems quite bullish with it all. It does look like it's a little bit overbought here. Again, lack of catalyst may sort of see these things cool off a little bit come early week. It doesn't mean that they're going to be sort of like crashing and falling down. It just sort of means that sort of like, you know, they finish quite strong. US dollar super weak. Maybe we could see these things sort of pull back here a little bit. I think underneath this little support here that we already had sort of tied out, this would be sort of an indicator that we're sort of going to pull back a little bit. Pull back level. Actually, pull back indicator. Well, level, so I don't get that sort of confused there. But underneath 65.18, I think you could probably see a little bit of a pullback, but I do think that that's still going to be quite shallow, if anything, at this sort of point. It does seem like it wants to keep charging up over here. Again, US dollar is going to be the sort of the deciding factor with everything through here. I'm pretty happy with these three levels as little targets. I don't think we're going to sort of get a breakdown underneath here. I actually don't think we're probably even going to get back to 64.70. Certainly not tomorrow. But if this thing does roll over, these are the kind of levels that I'll be sort of looking to sort of see how the market reacts. And if we can get long on something, maybe. I'm just still a little bit cautious because I do believe that, even though this is still coming up and here, if you take out sort of 65.70, well, 65.80 actually, I think is probably more the level to be looking at there, these sort of highs more, then you could see this thing appreciate a little bit more. But still, as it is at the moment, in medium term, you've got lower lows, you've got lower highs. Well, actually, this actually came in. Well, technically, you got a lower low by a point or whatever. But this is the kind of game they play. So they're down by 1 point and then rip it back up over here. So I think once this gets above sort of 65.80, I'd be saying, okay, this is actually looking like, this is just like whoop, and we're going to come back up over these tops over here. That actually gives it quite a large kind of double bottom, should that be the case. I don't think it is. I think we do actually get up over here. And I think through this area over here, we do start to sort of see a little bit of a pullback as well. So, yeah, I wouldn't, again, look, I'm not going to rush into anything too much this week in terms of the Monday. I think it's going to be quite quiet. But we'll see how we go. But certainly, I think if we get any sort of dips early, they could be sort of some early short-term trade buying opportunities. Move along. This is what I think has been a big driver of this sort of stuff as well. Is this is the one sort of coming down here and tapped right into this big zone. Now this is a massive, excuse me, this is a massive zone. This is actually on, if we even go even deeper, onto a weekly kind of zone where we're sort of seeing this thing sort of like, really sort of kick back off a couple of times, except for September 24. So what was that? Just before Trump sort of came in last year, and then sort of obviously it's ripped back up there. So of this move, where are we actually at? So because of course it's spiked up the top over there, so it's punched through the 61%. So this is really sort of starting to pick up a bit of speed with this last little sell down here. But this rising support here is of course something we've been looking at for yonks, very long time, and this is sort of going back to sort of May 22. Now this is coming in confluence with this sort of horizontals through here. Although it's pushed down, the RSI, yeah, it does look like it may want to sort of roll over, curl over a little bit, but it isn't exactly sort of sitting along the floor, sort of like oversold. As you can see, it's dribbling down through here, unable to find any sort of buying pressure. This little push down here is actually sort of seen a spike, so this is actually pushed down further as we've seen the RSI sort of push up, coming into very strong confluence of supports. It could sort of dip down underneath, go to the 78, 706 or something like that. It's still quite a significant move from here. But this is another reason why I'm a little bit cautious about Aussie in the short term, about it sort of potentially moving up higher, and also why I would be a little bit sort of cautious about gold. Like, this has got a very good correlation with gold, in the inverse relationship, in sort of correlation. But this moving down has certainly seen gold push up a little bit more. If we can see this flip around, and this support hold, I think it's going to put pressure on Aussie, and I think it's going to put pressure on gold there as well. Copper, actually, so before we do move on, that's a sort of a higher time frame look at it. That was on the weeklies. I think sort of let's just put in a little alert here and say this is a bounce for it all. So U1 bounce, eyes on Aussie, eyes on gold. See if this holds through here. Again, another one sort of like, I mean, you can't really sort of take too much from the last hours of the week, but high-low, if it does manage to put in a break above this part here, you'd be sort of targeting a retest of this breakdown level up over here, which could give a little bit of a cooling off of those assets, Aussie and gold, and obviously see US dollar probably catch a bid in the DXY as well. So I think this is a very important chart to be paying attention to at the moment. And finally, just with copper, another one just refuses to die. And it's really sort of testing out the top side of this kind of range here at the moment. We had that little bit of a fake breakdown in that, what was this, on Wednesday? Really came into it quite hard and it screamed back up to the top. But again, it hasn't broken out of its range. So similar with gold. I mean, look, gold was on a daily time frame, which is a bit different. It's on the 4-hour, and it's obviously right on its ass here in the scheme of things. But they both closed up into their resistance. So they're both sort of planning for like a strong open, strong carry through for the week. That's the question, are they going to get it? I think all these things I feel are going to sort of run a little bit in sync with each other, and which is if we see gold cool a little bit, I think copper will probably see this continue through this range over here. Likewise, if we see this thing sort of shoot back up over here, I mean, we're still a whisker from the lows after that massive sell down. So I've said this for a while that I'm not really interested with copper so much other than using it as a bit of a barometer. But this is another one where we broke the rising support of this little channel, retested the underside, coming up retesting the underside of there again. So these things can do multiple tests on the underside. We got summer finishing, I think, today as well. So over in sort of US, maybe not in Europe. I'm not quite sure. I'm not sure if they actually do it on the day, on the month of turn. But yeah, so I think it's going to be a massive week with it all. It's a bit hard to sort of be sort of putting any two major sort of positions or calls out there at the moment. But I do think that the main thing is that we won't see US dollar break till we get at least a little bit of that sort of job starter in, and then we start to hear how the market's talking about it, the headlines, and how people are sort of reacting, and how may they start to then price these things coming into NFP. Because if you get the conflicting data, or even though I sort of said ADP I don't think is a great indicator, it is still a tick in the camp of one or the other. You know what I mean? It's not like it doesn't hold any weight. It's just that it's not a good indicator as to what we're going to see with the NFP. So meaning if we do get a shock stronger number with the ADP, you may see US dollar still catch a little bit as they factor that into things, but it still doesn't mean that you can't then have incredibly weak NFP and just see the bottom drop right out of that as well. So yeah, certainly going to be a busy week, and we'll sort of see what happens, particularly once the US is back from the weekend. And that was another thing. Just to finish that off, they had a long weekend. We saw equities cool off a little bit into the close, gold push up a little bit into the close. Could be playing into the fact of people just, okay, we're away for the long weekend. Let's just hedge our bets a little bit. So without anything sort of major happening over the weekend, sort of geopolitically wise or anything, I could see these things probably cooling off a little bit in tomorrow's session. All right, that's it from me.